Welcome to the Federal Milk Marketing Order 33 update. This is Dr. Lawrence Jones, and I'm recording this on October 24th, midday. And this podcast is made specifically for Nobis Agri Science in connection with Balchem. So Order 33 is coming off some of the highest prices they've seen in a really long time. And so it's been a bit of a downward trend here for the last 4 or 5 months. And this particular month, September, was down about 70 cents from the previous month with a statistical uniform price of $22.64. Now, part of this difference is the fact that historically you're about 20% class 4. And in this particular month, you were only 2% class 4, which means that all the class 4 milk was taken out of the pool. And so you should be getting a separate check from your co-op if you sent some class 4 milk. Otherwise, you're just kind of dealing with the pool. But class 3 was clear up to 50%, and class 1 was around 40%. So let's see how you compared to everybody else. So again, you guys are down about 69 cents. So the Southeast was down a whole lot more than you were, and that's because class 1 in particular was down about $1.51. Class 3 was down 28 cents, so your neighbors to the west were only down about 32 cents in their statistical uniform price. But most everybody else was in that 60, 61, 62 kind of range. The exception was Arizona, that was up 9 cents, but that was a depooling issue. So overall, you guys were kind of in line with a change in milk price. So let's look at the components. So you had a 3.94% fat in order 33 this last month, which was significantly, it was up 3.85 last year at this time. So again, we're up almost a tenth. And we look at percent fat across the country. Again, you guys are 3.94, but look at Texas, 4.03, and the Pacific Northwest at 4.21. So overall, when we look at fat production for September, is actually up 3%. So milk production was pretty much flat, but fat production was up significantly. Part of this is due to the prices. So we had $3.57 for fat this month, way up from $1.94. So it's come up significantly. So there's no surprise that you guys are driving fat percentage. And it's going to go up a little bit, and then it looks like on the futures it's going to come down. But it don't look like fat will be below $2 anytime soon. So I think fat prices are going to be very good. Protein wasn't quite the same. You're 3.18, down just a little bit from a year ago at 3.22. And again, given prices, that's not overly surprising. And if we look at protein, 3.18, Minnesota, Wisconsin, 3.18. But again, Texas, 3.26, and the Pacific Northwest at 3.36. I mean, significant components out there in the Northwest. And as I said, it was not surprising given prices because we were at $3.87 here back in March, and we're down to $1.88 in September. So it made a lot of sense that nobody was really pushing for protein. And it looks like it's going to come up a little bit, but it's probably going to be a little while before protein gets above $3, which is kind of our benchmark number. Remember that protein is influenced by both cheese and butter, so as butter prices rise, protein prices drop. So let's turn to cow numbers for just a second, because the milk production report came out last Friday, and by the time you get this, the cold storage report will be out, but we don't have it quite yet. We're 9.41 million cows. That was up just a little bit from a year ago, but I don't like looking at year-over-year numbers. What I like looking at is this red line that I've drawn here as to how we are right now. And so we're down significantly from this, what I would call unsustainable peak, up a little bit from the beginning of the year. But at times we had really good milk prices was 2019 when cow numbers were down here quite a bit lower. To get an idea of cow numbers, we'll look at slaughter data. So for the week ending October 8th, we'd slaughtered 60,000 cows. I come down just a little bit, but I have a tough time interpreting these data. So we kind of turn to StoneX and say, how do we compare, to 2021 and 2020, we're calling about the same number of cows that we did a year ago. But again, that doesn't help me understand this data. What I like to do is actually put this into a cull rate. So I have the cow numbers for September, and then we do that, we can actually calculate the actual cull rate. And so we're right in this 34% cull rate. Actually, we're a little bit lower than in the first half of the month. But the way I look at this is if we're at a 33 to 34% cull rate, we've got 8 or 10% deads, that gives us a 43% turnover rate. To keep the herd stable, we're going to need about 8.1 million heifers, and that's exactly what we have. From what I'm looking at, this 33 to 34% cull rate is, keeping the herd at a stable number. If we look at milk production per cow, this is, coming up significantly, and this is a regression of the September numbers, and we were right on trend line, and we're gaining at about 1.14% per year. And so the question is, are we on a good trend or are we not on a good trend? But there's no doubt that production per cow is, increasing year over year. The other thing that impacts our prices is the global auction. This occurs twice a month on the first and third Tuesday. And this last one was down, 4.6%. And so we've had quite a bit of down. We had 2 sessions up and then down. So this has been, pretty much trending down. And they will give you numbers like, cheese was down 3.9, butter was down 2.6. But again, I have a tough time interpreting those numbers. So what I'm going to do is actually put this into US prices and then look at the actual change. So butter was down about 6 cents. Cheddar was down about 9 cents. Whole milk powder was down 7 cents, but that's at $1.55. And if we convert that to a hundredweight basis, it's around $15.53. We're not selling milk on the world market for a whole milk powder. If we convert all these numbers into class 3 and class 4, class 3 came down about 90 cents, class 4 came down about 70 cents. So overall, that global trade, we lost about 80 cents a hundredweight in value. So I showed you this last week, this basically arguing that the spot market is very good for predicting what milk prices are. And I grabbed this screenshot at the bottom, which was today's spot market. So you can actually watch that on CME Direct. It takes a little bit to get it set up, but you can watch that real time. And as we do that, the blue line here is what the spot market is, and then the orangish color line is the prediction. And you can see that this has been very good at predicting the class 3 price. So the question is, what's driving the spot market? So this is a graph of spot market every day. And so what's interesting when you start fitting trends to this, we were in a period from February up through May, when we were looking at significantly increasing prices, and all of a sudden it flattened out, and then just about as quickly it dropped. And so we've got this very much a V-shaped response here. And then again, right here on the 1st of September, we started up again. And so what's interesting is to try to figure out what is driving this change in prices. And right now, by the way, cheese is trending down. We've been out of this trend here for the last week. And so cheese prices are coming down. And actually on today's spot market, if we go back and look at that, we've actually got barrels and blocks on top of each other right now at 206. So right now, the cheese is currently trending down on the spot market. That means that we're going to see some downward pressure on class 3 prices. And we look at class 3 prices, it looks like they're going to come down through about January. So we've got the significant downward trend. The way you read this graph, these are the highest values we've ever seen. These are the lowest values we've ever seen. And then we've got this week and last week. And so actually the value for January was the lowest, the record of this contract. Now, non-fat dry milk is a little bit different. It is highly influenced by global prices. So this blue line on the top is the global dairy trade prices. And you can see that this has been trending down here. Now these vertical lines, I put in a 20-cent discount because we generally are going to run 20 cents below the global price. But you can see here, we were even lower than that for a while. But right now it is quite clear that non-fat dry milk is very much headed down. It's headed down to this 20-cent discount on the global dairy trade. And if we look at what's going on with the class 4 price, it also is pretty much on a downward trend, with this low in January, February, somewhere in here. So the spot market is really suggesting we've got downward pressure on all of these prices, at least in the short term. So if we kind of stand back and say what's going to happen to class 3 and class 4, the class 4 is going to stay on top of class 3, for a while, and that's a bit of a change, and I'll kind of explain why that is in a few minutes. Both of these have got downward pressure all the way through about January. All right, so another comment I want to make here is there's a concept in soybeans where when you have soybeans, you crush to make meal and oil. And the question is the crush really focused on trying to make a lot of meal or a lot of oil? And you can actually calculate the spread between these two. And right now, soybean meal is giving you about $1.80 a bushel more value than what you have in soybean oil. And so the crush is going to meet, the meal demand, and even if it makes surplus oil, that's not a problem. As a consequence, it's going to drive down the soybean oil price. Now we can actually do the same thing with class 4 milk, because class 4 milk gets turned into butter and non-fat dry milk. And right now, the spread is $2 in favor of butter, and that is really unusual. Normally, butter is the stepchild. And so what this means, it's going to churn to meet the butter demand, and as a consequence, it may be driving down the non-fat dry milk price. And here is a graph of the butter relative to non-fat dry milk, over time. And so historically, if we draw a zero here, historically, butter is worth less. It's very unusual for butter to be worth more, but look at this, just rocket ship up here. We're at $2.07 value for butter over non-fat dry milk. So what this is going to do is put very much downward pressure on non-fat dry milk. And so that's going to drive down our class 4 prices here. So one of the graphs I like to give you is budgeting without basis. So what this is some prices without basis built into them. So right now for the next 12 months, and again, I always do this as a rolling 12-month average, we've got soybean meal, just under $400. We've got corn, just a little under $2.40. We've got class 3 milk at just a little over $20. We've got class 4 milk at $21. So that gives us a 50-50 blend, just about $21 here. And if we go back and look at this a little bit differently, we've plotted out these corn prices, for the rolling 12 months, and we've been in this 220, 240 kind of range. We dipped under it for just a little bit in early August, but we're hanging right at this trading range right now at the top end. The same thing with soybean meal. We've been in this 390, 410. We've hit this resistance, numerous times, and right now we're just about 400, so right in the middle of that range. We tried going above it numerous times, but didn't sustain that at all. And so our 50-50 blend milk has been kind of coming down. We were very high back here in April. And then, as I say, recently it's been trending down a little bit. And if we look at our dairy margin, which is an 80-pound herd eating 8 pounds of cornmeal, 8 pounds of soybean meal. So this isn't total dairy margin, but it kind of gives us an idea of milk price and corn and soybean meal. These have also been trending down here just recently. Couple of things from a geopolitical perspective is the U.S. dollar. I mean, this was clear up to 114. That's come back off of that a little bit. The numbers that normally we talk about if we want to have really good trade is like 92 to 94. So this US dollar being up in the 110 and above is definitely some headwinds for exports. And as we look at corn and wheat and all of these different commodities, they follow oil very, very closely. And so this has come down here recently. It's kind of sideways in this $80 a barrel range right now. It did spike down to clear 74 at one point. But we're kind of in this 82 to 90 trading range here since July. Now, one of the things that you've probably been hearing about is the Mississippi River. This is actually people walking across the Mississippi River over to an island here, which is normally pretty well submerged. The point of this is really impacting basis on grain that is going to rely on barge movement. So basis is really starting to drop, around these areas that we rely on the barge, and it doesn't look like the Mississippi River is going to be, given the moisture it needs to get back up, anytime soon here. And if we look at this drought map, a significant drought in the Oklahoma, Kansas area, which is important for wheat development. It looks like western Michigan is a little bit droughty there. And we look at how things changed this last week. You can see that the drier in this kind of midsection here, it looks like Michigan didn't have any really big changes here this last week. And we look at the shallow groundwater index from NASA. Again, Michigan looks like it's got plenty of water here. You can see this pretty big drought here in Kansas, Oklahoma. All right, so that should give you just a quick synopsis of the industry. It looks like non-fat dry milk is definitely coming down. Cheese is trending down a little bit. I would expect our highest prices are behind us here in the last couple months. And I'm more expecting prices to kind of settle in this 2021 price range. I don't see $1.60 cheese coming anytime soon. Now, the grain market is one of these that's kind of built on a tinderbox. Wheat, with just a little bit of problems in Ukraine, Russia, that could take off to $10. There's lots of discussion that we could see $8, $9 corn again, but right now we're not with harvest pressure. So it's a good time to kind of keep an eye on things. I think there's probably more downward pressure in milk and upward pressure in grains at this point. So I hope this was helpful, and I hope everybody has a safe week.